is Thursday the 12th of November. Hope you're all doing well out there. Thought it would be a good time to give you another currency update on the G3 pairs. Haven't made a video for a little while. A lot has happened since my last video. We've had positive news on Brexit. We've had a US election, albeit contested. And we've also now had Pfizer recently come out and announce a possible vaccine is imminent to help prevent the coronavirus. So a lot has happened. Let's jump straight in by having a look at the pound versus the euro. Anyone that's watched my previous videos, you will know for the past 4.5 to 5 years we've been consolidating sideways. So in June 2016, this was the Brexit decision that sold us all the way down from 130 to 106. This is essentially the bottom of our range at 106. We then rallied right back up to around 120, and ever since then we've been sort of bouncing up and down between this range and also between the 110 and 115 range as well. So we found support, resistance, support, resistance, support, and so on and so on and so on. So those are our key levels: 106 and 120, bottom and top of our range, and then 110 and 115. So if we go down to the weekly time frame, we can see things a little bit more clearly, and I can show you what's happened more recently. So sort of early February, we had the markets hit the top of our range, and this was also the stage that we were really starting to get a lot of information about the pandemic. And essentially what we've got here, this massive sell-off, is your pandemic sell-off, when investors took flight out of riskier currencies and risk assets. We sold all the way down to the bottom of our range. Subsequently, we did have a sharp bounce back up to the 115 resistance area, sold back again to the 110 support area, broke back below to the lower end of our range, and for the past couple of months we've now been rallying and we're back above the 110 support level. So we would anticipate that we're probably heading back up to 115 initially, and if we can get back above that, then hopefully back up to higher prices around 120. If we zoom into the daily time frame, we can see what's been happening for the past couple of months. So since early September, we've had a decent rally up, which you can see encapsulated in this upward, this ascending channel that we've got plotted here. On Tuesday, however, we did hit the top of this channel. Wednesday we tried to break out further, but we couldn't, and the market was pushed back down by the sellers, and we actually closed back below this channel. And coming into today, we can see we're now selling off a little bit. This is also compounded by some fundamentals. So we had GDP data out this morning for the UK, which was slightly worse than expected. So the UK economy is contracted slightly more than had been forecast, and which is why we're seeing this bit of a sell-off. With that being said, we don't expect this sell-off to be too pronounced. Perhaps we sell back down to this previous resistance area, which is around 111.50. We might not make it back down to the bottom of this channel before we push higher. Importer price target at the moment for our clients is 113. We did manage to get quite a few of our clients in at the top of this ascending channel, which was good. For our exporters, we'd say first target would be around 111.50. If we can break below that, then probably around 111.15, 111.20 would be a decent place to repatriate your euros. So that's how things are looking for pound euro. Let's swiftly move on to the pound versus the US dollar. Again, with this one, we've been in a downward trend for many years. So since the middle of July, since the middle of 2014 July, we've been descending in this channel. However, in July of this year, 2020, we actually broke above this descending channel, and we've subsequently come and retested the top of the channel. We found support there, and for the past 2 months we've been rallying higher. If I take us into a weekly time frame, we can see things a little bit more clearly, and here's your breakout above the descending channel in July. We went and hit a very key resistance area in August, and we sold down to the top of our descending channel. So 133 has been resistance for many years. So you can see we've sold off there, and more recently, over the past couple of days, we've actually hit 133 and been rejected again. So if I take you down to the daily time frame, we can see again things a little bit more clearly. So here we go. Yesterday we hit the 133. We went to 133.13 and got rejected by the end of the day. Again today we're seeing a sell-off, and that is, as I mentioned, with pound euro, partly compounded by the contraction we've seen in the UK economy, and we've noted that from this morning's GDP data, which was released. Again, we don't expect to see too much of a pronounced sell-off. We are still above our descending channel, which is positive, and providing we stay above our descending channel, we would expect to see higher prices. So we might find some support at this previous resistance, sort of around the 131 to 131.80, or yeah, around 131.60 area. So we have to wait and see how that plays out. The key test right now is, can we get above this 133 level? If we can, then we do have higher prices projected up at 140. However, that could take at least 6 to 12 months to play out, so that's a much longer term projection. And as I said, that's dependent on the market staying above this descending channel and also breaking above 133. For importers, price target will be 133 at the moment. For exporters, since we think that the market is more skewed to the upside, we'd say where we currently are isn't the worst place to repatriate some dollars, considering this area could be support and we could head straight back up. If we do break below this level, below 131, then the previous support level of 130 would be a secondary target to repatriate your dollars. So that's a look at pound dollar, and let's move swiftly on to euro dollar. Very similar picture to pound dollar. We've been in a downtrend for quite a bit longer, actually, since 2008. Since the financial crisis, we've been in a downward trend for 12-13 years now. Again, similarly, in July we broke out above this descending channel. We've come and retested that channel, and it now seems that we've found enough support to start to make a decent rally. If we go down to a weekly time frame, so we can see, since April of this year, we've had a very strong rally up in the value of the euro versus the dollar. And what usually happens after such a strong move is that the market needs to digest. And what we've done is we've digested with a sideways consolidation. Really, what we would need to see for this move to extend higher is a break above the 120 level, and that would let us know that we can expect higher prices moving forward. We can go down to a daily time frame, so we can see since we broke out in July, we've come and tested the top of this descending channel quite a number of times. So 1, 2, 3, 4 times, and providing similar to pound dollar, that we remain above this descending channel, then we are optimistic, cautiously optimistic, that the value